The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 10th, the magical Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make the one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day with a move to the downside. Dow's down 320. All the U.S. indices trading to the downside. Russell, S&P is off 110. NASDAQ 630. Russell 32. Dow Transport's down 137. 188 for the semis. Composites off 639. New York Stock Exchange down 231. Gold is trading out at 29.10. That's off $3. Silver's down 18 cents. She's trading at 32.63. Light Sweet Crude is off 50 cents at 66.52. Natural gas is up 8 cents. If we take a look at any signals out here, I think the only one is really coming from the utilities. That completes a TD9 count bottom pattern today. Let's take a look at its charts just to give you a feel for what they're communicating to you and I. And we take a look at it. So it's got a nice little rally that is going on, the XLU, and so you can see it completes the TD9 count bottom pattern today, and price is running right up in towards its oscillator and change line, which is green. So we're watching for there. That's at 78.42. Call it 78.42 to 78.45, something like that. A close above that at day's end would then tell us that price should go target the next resistance zone. Oh, I take that back. It's back in the new profile today that's forming. A close above 78.41-ish. It should lead us up towards 79.76. There's nothing getting in the way of that taking place inside the weekly chart or the monthly chart. So I would anticipate or expect that he'll be able to clear that oscillator and change line. Any other signals out here? None that CVSTs. If we're looking for intraday signals here, if I put over this, what is this? Little market analyzer. Tells us exactly, and these signals just looking at the TD9 counts out here. So if we take a look at, so interesting, you got a 10-minute TD9 count bottom forming on, for the inside the NQ, a 30-minute and a 60-minute time frame chart. So why don't we go take a look at the, now to look at those intraday charts, what we're going to have to do is we'll switch over. Give me a moment here. We'll switch over to these day trading. We should have those time frames set up for us. And we got the ES up. We come back and take a look at the ES, but let's go take a look at the NQ out here because it had three different time frame. Whoops, shoot. That didn't work. Let's try this one more time. Fat Finger Monday. NQ 325. Here we go. All right, so we'll let this populate. It'll take just a moment in time. We'll start with the bottom panel of the screens. Those were the ones showing the TD9 count. So you can see the TD9 count bottom pattern on a 10-minute time frame. You can see we're trading inside a new bearish structured profile. Price ought to rally up towards 19,645. That's its oscillator and change line. Above there, you're dealing with a sell zone between 19,682, 19,736. On the 30-minute time frame chart. You will confirm a TD9 count bottom pattern in about 19 minutes. You'll complete that pattern at the end of the show. What should unfold is price should rally up towards the oscillator and change line. That level is 19,780. If we take a look at the 60-minute time frame chart, it has completed a TD9 count top. Now, that's important, and the reason that's important is because you've got a very important touch point for the rest of the day. I would say a close below that TD9 count bottom on the 60-minute time frame. That low is at 19,521. It really increased the odds of a further move lower out there. Now, that's the bottom panel. We didn't have a bottom signal on the 15-minute time frame chart. We do not have bottom signals on the 120, the 240, 5-hour, or certainly the daily time frame out there. They do have Rhodes momentum indicator signals that are triggered, but those need bullish reversal candles in order to confirm a bottom. So the first thing is to keep your eye on the bottom row of charts. The second thing is to watch to the downside, the price point of 19,521. If you close below that, and as far as time frames, so that's the hourly time frame, but I would think it's probably going to be any time frame. If we close below that, we're likely headed lower. Now, there were some signals coming from the ES Mini as well, so let's go pull those up on our screens. I think it was just the ES and the NQ that, hey, what did I do? It was only the ES and the NQ that were generating those signals out there. There were just a couple on the ES. So if we take a look at the ES Mini, actually there's a little bit more. The ES Mini has got a 10-minute time frame or Rhodes momentum indicator bottom signal. So price is dealing with the resistance of its oscillator and change line in the center of its profile at 5670. Close above that, we ought to get to 5687. Bullish candle in about 3 minutes here time. You'll get a confirmed Rhodes momentum indicator bottom on the 15-minute time frame chart. 5674 is its price target. Above that, 5690 to 5694. On a 15-minute basis, a close above 5694 would suggest its move for its time frame is something more than a counter trend move. You're going to form a TD9 count bottom and in another 12 minutes for the 30-minute time frame. Price ought to rally up towards the 5684 level. TD9 count again on the 60-minute. So that makes that low very key. That low for the day so far is down at 5646.50. Key level to watch. Just intraday, just on a 2-hour, 4-hour, 5-hour, we still have the Rhodes momentum indicator signals that are present. Now, in the case of the 5-hour chart, this bar here doesn't complete until 2 p.m., but it closed, and it does have a Rhodes momentum indicator bottom with that key threshold level of support being 5673. So if we close about 5673 on a 5-hour basis, that doesn't need a new bullish reversal candle to confirm a bottom. We have the same thing, it looks like, on the 240. So the 240 formed a Rhodes momentum indicator bottom, 5673 as well. So that's a real key level. Quite frankly, is it 5673? It is for the 120. 5673 is really important on the upper panel of charts, 120, 240, and the 5-hour time frame out there. We've got a few minutes up. Not a few minutes. We've got a few seconds. Let me put up the Dow equity future contract. Don't know that we'll be able to get to that the next 8 seconds out here, just looking to see what their intraday signals look like. And that's what you're just looking for. I don't know that we'll come back and chat about it, but I see RMA bottom. I see bottoming patterns on the 10, the 15, the 60-minute, the 120, the 240, 5-hour, not the 240, but the 5-hour chart. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, everybody. Had a chance to see Lee Ritenour over the weekend. If you don't know who Lee Ritenour is, he's one of the original members of Foreplay. Foreplay was 4 jazz musicians. It was Bob James. It was Lee Ritenour. It was Harvey Mason on the drums. How amazing is that? And Nathan East on the bass out there. So that was a great concert to see. The more amazing thing is that Lee was the backup band for Spyro Gyra out there. So, but what great, beautiful music to take in over the weekend. Let's get to a couple of requests that have come in here. We've only got a few, so I'd love to get more. Let's go back to this way and take a look at it. Let's start off with the first one, which is take a look at ARM Holdings, ARM, as we take a look at. Yeah, Phil, he's amazing. You know, he got Lee Ritenour, Larry Carlton, both, by the way, played for Foreplay out there. You know, those two guitarists, sit around and watch those two guys play all day long. But let's take a look at ARM Holdings. ARM Holdings formed a TD9 count bottom pattern. Was it negated? Let's find out. That pattern formed on the trading day of March the 4th. The low was 117.89. Did we close below that low? 117.92. No, we did not. So ARM Holdings still has a TD9 count bottom pattern that's in place out here, Duncan. But the thing you're going to watch is that low from March 4th. If you're to see a close below 117.89, that bottom signal gets negated, and that suggests that we head lower. If you were to say head lower to where, I would say 108.69. 108.69 is the TD9 count breakout level on a weekly time frame. That's been tested. It's been tested and rejected back in August 9th. Of 2024 out there. If I look at a monthly time frame chart, just not enough data really to help us out here. The intraday charts is prices tested a Rhodes Momentum Indicator bottom. So far, that has held. So what ARM Holdings should do, this is under the assumption that get back inside its profile, Steve, and that just needs a close above 120.66. So if you get a close above 120.66, you ought to see 129.17. You know what to look for to the downside. You also know what to look for to the upside. So I hope that helps you out. And you had a second request, which was to take a look at the amazing one, Amazon. AMZN is the ticker symbol. Let's go ahead and get this up here. We take a look at Amazon. It'll populate momentarily. I hope it'll populate momentarily. What the heck's going on? So Amazon, no bottoming pattern. Price trading below its daily oscillator and change line, which is red and bottom of its profile. Bar number 7 today. I would say Amazon, if it is going to form a bottom, bottom would form between tomorrow, Tuesday, and Thursday, and that would be a TD9 count pattern. Now, we still got to get bar number 8, 9, or the bar following bar number 9 to go ahead and form out there. But that's what it looks like to me. And at the same time that Amazon is doing that, Steve-O, what price should do is move down towards its breakout level of support on its weekly time frame. That number is 185.23. Now, this is 5 weeks in a row that we've had so far for Amazon. This would make it week number 6 out there. If 185.23 does not contain price, then the next downward move would be at the 169.79 area. That is the bottom of the monthly profile. And it's a possibility. But first, just take a look at the 185.23 level and then watch the pattern that's forming on the daily time frame. Now, on a 30-minute time frame, it's suggesting you could get a bit of a rally here. It's trying to form a bullish engulfing candle. It's got another 7 minutes to do that. I'm going to assume that it's a bullish piercing candle, not a bullish engulfing candle, bullish piercing candle. But what's got to contend with, it's 193.50, 194.48. So you need a close above 194.48 to suggest at least there's more intraday rally, with 197.40 being its likely price target at the top of that profile. So, Dunk, that's on Amazon. And thanks so much for your request. ELO inside our Tiger's Den would like to take a look at PLTR, Palantir out here. So let's see what Palantir is doing. And Phil, is that a request for OIH? I hope so. Even if it's not, I'm going to take it as a request to go take a look at the OIH. Just simply, we are short on request out here. So let me type that in while we're waiting for Palantir out there. So Palantir is testing its breakout level of support as we speak right now, ELO. That's at 78.47. Now, if price were to close below, let me see if that's the exact number or not. 78.58. A close below 78.58 today, and you're at 78.52 right now, will negate a TD9 count bottom pattern in Palantir. That would suggest lower price. Lower price would mean a price target of 69.60. If you look at the weekly time frame chart, which has a confirmed Rhodes Momentum Indicator top, it's traded inside its buy zone, and the buy zone is 69.60 to $82 even Steven. The monthly time frame, I really don't have a clear topping signal. Yeah, I got a nice big old shooting star candle, but I don't really see the A to B equals CD pattern there. Nothing on the 30-minute time frame chart to suggest that price doesn't continue to move lower out there. But nonetheless, you're back to an area of support on a daily time frame, really two levels, 78.47, where it broke out from, but the more important level, 78.58, the TD9 count bottom low out there. You close below that, we are likely headed lower. Let's go take a look at OIH, oil service holders for Phil inside the Tiger's Den. So give us just a moment here for this to populate. I also had some requests. Yeah, thank you, Dunk. We'll take a look at that. I also had some requests to take a look at the horizontal and diagonal trading ranges. So those come off of my black background chart. So about a half hour before I started the show, I put those into a PowerPoint. So we'll take a look at those as well. But now we take a look at the OIH out here, Dunk. Sorry, this is for Phil. It completed a TD9 count bottom pattern on March the 5th out there, and now price is just consolidating really with inside its daily profile, 243.86 at support, and right now where we're basically trading at 255.24, we're just trading just slightly above that. The key level here, Phil, is going to be that daily oscillator and change line. The current print on that is 256.64, so kind of use that as a gauge out there. If price were to close above that, then it could be signaling what should signal a further rally. Its upside price target will be 281.92. If you look at the weekly time frame chart, what I don't see out here is any kind of a bottom pattern. I see price below its oscillator and change line as well as the bottom of its profile. No bottom signal. That's suggesting lower price. The monthly time frame price is in bar number 8 of a TD9 count. Is back at the buy zone. It's actually trading just slightly below it, I believe. The buy zone on a monthly basis is 257.84 to 281.45 out there. So the monthly bar number 8 in the buy zone may be bottoming out here for the OIH. It's only the 10th, so we really won't know that until we get towards the end of the month out there. So hope that helps you out with regard to the OIH. There was a request to take a look at the SOX, SOXX. So let's do that. This is for Dunk as well. Jambalaya wants to take a look at Root and O, so we'll definitely do that. As we get the semiconductor stock charts up, you got the semis, the index itself down 177 points, or nearly 4% out there. When you look at the SOX ETF out here, you can see that price is trading below profile support, 199.56 out there. So you'd prefer to see price get back above that. The weekly chart is targeting what looks like a swing point. Let me open this up. Yeah, it's a swing point from back on the week of August 9th. 30 million shares traded that week. The low, 192.87. Looks like that is the price target. A close below 192.87 would trigger an A to B equals CD pattern to the downside. Too early to tell whether that would be with volume or not out there. It looks to me like that's where price wants to head to. The monthly chart shows support at 184.09 out there. So it looks like stocks want to head to the 184.09 to 192.87 level. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. These are two interesting charts to take a look at. The one on the left is the New York Stock Exchange. Now, we use this chart here primarily to calculate the advanced decline oscillator. The advanced decline oscillator is nothing more than the difference between a 39 and 19 period exponential moving average of the advanced decline line. Now, when it gets down to one of these blue lines, the first blue line is at minus 150, the next one is at minus 250. That's when you get into oversold conditions, the minus 150 level. There's an A to B equals CD pattern to the downside. It is still in place out here. It was formed with this bullish piercing candle that formed on March 5th. What that says then is that support is really the low of the pattern. Low of the pattern would be the prior bar's low, and that's at 19,383.39. You can see that we're trading above that as we speak right now. So that pattern is still in hold. But what I also really noticed out here, this is really what I noticed. I've noticed now that we may be setting up, or this may be setting up, a series from a price standpoint of lower lows, while the advanced decline oscillator is actually making higher lows out there. Now, that's a divergent pattern, not enough just to trade on, but is enough of it is enough of a piece of signal information out there that just says, be careful. If we take a look at the spot VIX index, it's got a TD9 count top. The high of that TD9 count top is 2635. We've tested that. So far, we've rejected it. We could close above 2635 at day's end. That signal will get negated out there. But otherwise, so those are two kind of important signals just to be aware of, especially when we were taking a look at the NQ and the ES Mini and those intraday time frames out there and all the bottom signals that they have. So that was the first thing to notice. Now, what I'm going to do here is, I'm going to just close that out just to free up some resources. But what I'm going to do is, there was a couple of requests that came in over the weekend if I could show the horizontal trading range boundary line. So I've done this for the S&P, the Dow, and the NASDAQ 100. So it's just on my PowerPoint presentation. So it's not like I can hover over a candle, tell you what day, week, month. These are monthly charts, by the way, that we're looking at. But here's what I can share with you. First, take a look at the green diagonal lines. Those start from the 2009 bottom. Now, here I'm just using true trend lines. I'm using, for the most part, the bottom of the candles. Sometimes it turns out to be the body of the candle it runs into. But that's the rising trend line. Now, the cool thing about both horizontal, falling, rising trend lines is once you identify a good solid line, and a good solid line, you'll be able to see it holding these key levels of support or resistance out there. Then you've got the distance level to add to your second and your third trend line. So all those green lines that you see out there, again, that's based upon the equal value that was established by that first trend line out there. And you can see that price got up towards that third, that little dashed area out there. But price, if you take a look at now, if we come off of the March 2020 lows out here, that's what the yellow rising diagonal charts are all about. So there's really been no levels of rising channel support that I can see that has been. Now we might be able to find a shorter term time frame, sure, but I'm just trying to take a look at this monthly chart, this bigger picture stuff. Now, we do know that price is trading below 58.78 out there. That's a horizontal trading range boundary line. That opens up the door for a move to 54.61. That's for the S&P 500. If we take a look at the Dow again, now in this case here, I can see that I was using the bodies of the candles for these as opposed to the bottom of the wick or what have you for their trend lines. Again, two different ways to do it. Both are correct. Both are right ways to do that. Again, just adding to it the equidistant levels out there. I've also got the same rising price channel from the 2020 lows out there. So no trends have been broken, but price is trading below that horizontal trading range level of 43.032 out there. And that could signal move back to the 39.434 level out there. Finally, if we take a look at the NDX 100, the NDX 100, I go back, which basically is to the 2008 low. That's when it made its low out here. And you can see those trend lines, those green diagonals. You can also see the green dash line. That's, again, starting from the 2020 low out there. So nothing really broken here other than the fact that price is trading below this 2863 level, or horizontal trading range boundary line. And that says that it could open up the door for the 18099 level. So that's for the S&P, the NASDAQ, and for the S&P 500 out there, all potential levels or areas of support. Now let's get back to the requests that have come in. The last request was from Jam Balai inside our Tiger's Den. And Jam would like to take a look at ROOT. And ROOT confirmed a Rhodes Momentum Indicator top 3 days ago. That was on March the 6th out there. And right now you'd have price trading with inside its profile. And above that green oscillator and change line, it's really still, even though you got a bearish message on the daily time frame, it's still really strong. And let's look at the real strength on the weekly time frame. Now, it confirmed a TD9 count top last week. And this week will complete the pattern. So you can still get a higher high and complete the pattern. That suggests that root would pull back towards its oscillator and change line around the 117.78 level. If we take a look at the monthly time frame out here, I don't see anything bearish about it. If I look at a 30-minute time frame, I see prices trading with inside his profile, three resistance levels to the upside, 134.98. 138.79 and 141 even Steven out there. So you got tops on the daily and the weekly chart out here, but boy, it sure looks strong like bull. It looks very strong like bull. That's what I see when I take a look at root. Let's go take an AG out here. See what its charts are communicating to you and I. And then we're also going to take a look at O. So we take a look at AG. I see a sideways move. When I look at that daily time frame, I see that price right now is testing its oscillator and change line at 559. Just a sideways move on the daily. Really, you look at the weekly chart out here, Jam, you see really just a sideways move. I see a TD9 count bottom pattern that looks like it was negated. It was negated 2 weeks ago. But price is in trading inside a new profile. Let's pull this back just a tad. So here's what I can provide to you. Profile support at 532, profile resistance at 613. That's coming from the weekly time frame. AG is a lot of sideways action. No matter how I look at it, no matter how we cut it, slice it, and dice it, it's a lot of sideways action. Now, the monthly chart does still maintain the TD9 count bottom pattern out there. So that's your level of support. That would be 438, and resistance would be the TD9 count breakdown level, and that's at the 839 level. So that's what we see when we take good AG. Let's try ticker symbol O, see what it has to give to us. Hold it. Okay, so we take a look at O out here, trading out at 59.37, trading today, Jam, above both its resistance level from its profiles at 58.53 and its oscillator and change line. Daily time frame, nothing but blue skies ahead. Well, maybe there's a couple of clouds. When we come back from this break, I'll tell you where those clouds are hanging out. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We had a request that came in from John in Milwaukee. His question is about the Qs. Now, what I've done is I re-put the NDX 100 chart up on my screen out there so I can, at least show him a pattern. So his question, though, is will the Qs get back to the 540 level? We'll put that up on my screen here in a moment over the next 12 months. John in Milwaukee. No, John, if you take a look at what I can give you a bigger picture first. So this is not necessarily the next 12 months, but it's the bigger picture. And there is an A to B equals CD pattern to the upside, large one that's been confirmed. That takes the NDX 100 up to 26,186 out there. So that pattern is still in play. What price is trying to do right now is just pull back to support. One potential support area, as we discussed inside the NDX 100, could be the 18,099 level. That is a horizontal trading range. There's been I don't know how many times price has used that touch point out there. So that's one possibility. But you're asking about the Qs. You know what? I did that out of order. I forgot. I'm going to come back to that. Only because I've got O up on my screen out here. So, and we did start that. So a little bit dysfunctional there. That's Stevie for you. If I do take a look at O, though, let's come back to the daily time frame out here. I do see an A to B equals CD pattern to the upside. And it looks like it's completed more than the 1-to-1 level. So it has a Rhodes momentum indicator bottom pattern. I'm just going to move the A to B point over to the C point. On my chart, it's really easy to identify because I'm using those Chapman wave letters out there, and that's that letter D, where Basil also says something different did happen in the case of the ticker symbol O. Now, this already had a sell the D point pattern that formed on March the 4th. That pattern right now would be negated today with a close above its high. Its high was 58.53. That being said, if you get another bearish reversal candle that forms today, even if it's a close above that, so right now it's a bearish shooting star, that would be another sell the D point. However, price remains above profile resistance at 58.53, above its green oscillator and change line. Boy, those are very bullish conditions on a daily time frame for ticker symbol O. And they're very bullish signals on the weekly chart. Price traded above the top of its profile. Now, the oscillator and change line here is green. So it is not as strong, not yet, as the daily time frame. Nonetheless, there's no resistance really ahead, and 64.88 is its upside price target. That's the weekly time frame. The monthly tells you this is where the clouds start rolling in. At 60.35, that's the center of its profile. 64.18 would be another area. On a 30-minute time frame, it shows that there's a potential for a TD9 count top at 12 noon. In order for that to happen, a price must close above 59.34, and we're at 59.22. If we close below 59.34, the TD9 count pattern goes away, but there's already a sell the D point. Well, let me open the chart here. Yeah, we could draw it an A to B. We could draw it a sell the D point. So I'd watch 59.26 out there, close below that. Then the targets are 58.33, 58.50, 58.76 to the downside out there. So that's what I see. We take a look at O. I know you've got, I don't know who, I've just wrote down requests. So I'll come back to those. But let me just go back to the Qs real quickly out here, just to kind of finish that thought process, even though that's kind of hard to do. We're just taking a look at just simply daily, weekly, and monthly potential support levels for the Qs. There's no downside pattern. I'd really struggle to type in an A to B equals CD pattern to the downside. Feel like I'd be forcing it. I kind of hate to force that pattern. So if we take a look at the Qs right now, we're inside its weekly profile. And this profile here is pretty equally balanced. So where's the level of support? The real level of support on a weekly basis, I would have to say, would be 449.82. That's its TD9 count breakout level. That's not to disregard support at 471.49, which is the center of its profile. That is most certainly a support level. And there's another support level that's at 439.46. So that's on the weekly chart. On the weekly chart, let me open this up and point something out to you. And that is, we are now in week number 4, potentially, of consecutive moves to the downside. If we come back and we take a look at when was the last time we broke 4 consecutive moves to the downside, well, what I really will just prefer to start with is this nice bottom that formed with the TD9 count Rhodes Momentum Indicator bottom back in October. Since that bottom out here, we take a look at weekly moves to the downside. The largest weekly move to the downside that we've had has been 4 weeks. And that was back here in December 30th. And then we've moved to the upside. We did have another 4-week decline. That was one that lasted through April 19th. We had another one that lasted through August 2nd out there. Well, we're in the 4th bar here. What do you think the odds are that this week is a bottom? Stevie's going to raise his hand and say, well, I think they're relatively strong out there, just simply looking at this pattern. Now, doesn't mean that we will. And if we don't, then we can say that, okay, the pattern has changed. No key levels of support, though, perhaps being broke inside the Qs. So that's really the first element out there. Whether we're going to get back, this is going to get back to basically the all-time highs. I don't know the answer. There's so much stuff going on geopolitically out there that, can you tell me, is the war in Israel going to end? Is the Ukraine-Russia war going to end? I don't know about you. I read stuff that's coming out of the EU out there, and no, I don't think those people have any interest in ending the war. So it's really going to be about capital flows. And if the war continues to go on, then my answer would be more likely yes, we'll get back to 540 after we find a solid bottom, because capital will continue to flow to the U.S. At the moment, capital isn't flowing to the U.S. Just all you have to do is look at the currencies out here. We had talked about the U.S. dollar index, which still is likely going to see lower price. The euro here is on its way up to the 1.0936 level. That's its TD9 count breakdown level. The yen itself, in order to form a bottom, needs a bullish reversal candle. Until that, it wants to get stronger. Dollar getting weaker. In the case of the pound, it wants to get stronger by moving up to its TD9 count breakdown level at 129 out there. By the way, Bitcoin, I just happen to have that. You can see it's trading down at profile support at about the 88.40 level out there. So really strong moves inside these currencies. How long they're going to last, we'd really have to go evaluate the daily, weekly, monthly time frame. I don't have a request for it. I'm not going to do that at this moment in time. Instead, what I'm going to do is get back to those requests that have come in so that I don't screw that up. And the next request that we're going to take a look at is for ALLR. And like I said, I apologize. I didn't write down who made these requests. I was kind of multitasking. You know what happens when Stevie multitasks. Doesn't end well. But let's go take a look at ALLR, traded out at $1.18, traded above profile resistance and its TD9 count breakdown level. We're in bar number 6. I'd say ALLR, its daily time frame says, I want to rally more. But these weekly charts, What the heck is this? And daily, monthly chart. I don't have a lot. I apologize. I don't know what this sideways chunky move out here, but here's the deal. The daily time frame is saying that it wants to rally further. Today is bar number 6. Watch this because you could get a TD9 count pattern that forms between Wednesday and Friday of this week. Could be. So I'd say whoever had that request, let's come back and look at this on Wednesday, Thursday, or Friday. Again, that ticker symbol is ALLR. We also had a request to take a Carvana. CVNA is the ticker symbol out here. And we'll look at Carvana. We get back to this break. We'll look at Carvana. We'll have enough time. I'll make it work. We'll look at Visa and Goldman Sachs before the end of the show. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back. Oh, my goodness, I can't believe what I did there. Stevie. Okay, let's get back to the first request out here, which is Carvana. CVNA, it has an A to B equals CD pattern to the downside. Let's draw in that A to B line out there and just move it over to the C point. So there's your A to B point. Here is your A to B equals CD. So it's got a price projection in about the 154 type level. At 143, you've got weekly breakout support. Weekly chart has a Rhodes Momentum Indicator top. We're testing key level of support on the monthly time frame for Carvana. It happens to be the top of the monthly profile. As long as price remains below 175.17, we're not below right now, but if price remains below 175.17, that's going to suggest that the daily A to B equals CD pattern goes to target the what's called 143 to 150 type level out there. That's what I see when we take a look at Carvana. We take a look at Visa. Visa right now is trading out at 343.49, also below profile support, maybe targeting its breakout level 334.50. Has a daily Rhodes Momentum Indicator top. It has a weekly sell the D point top out there that formed last week. But what price is doing, it's trading with inside its profile. So in order to gain any kind of downside traction, price would have to close below 341.46 on a weekly basis. And finally, on a monthly time frame, let's populate this chart out here. You've got potential TD9 count top that could form at month end. Yeah, that's pretty much what I have for it. And now let's go take a Goldman Sachs. I meant to do that earlier, and I just simply got carried away in thought. So let's get up the charts here for Goldman Sachs, see what it is doing, where it is headed to. If you give me just a moment, Goldman Sachs is trading out at 536.82. It's trading below its oscillator and change line. It's trading below its daily profile. It has negated a TD9 count pattern on the daily time frame. This is suggesting lower price. The lower price target, I would say, would be 484.20. That's its weekly TD9 count breakout level. The weekly area of support is at 488.85. So I've got 488.55 to 484.20 is the price target area. Folks, stay tuned for all the great programming we've got lined up for you. I'll see you back here later, 3:15 with Jacob, and then tomorrow, 11 a.m. sharp. Have a marvelous Monday. Thanks, folks.